Here are seven reasons why 2025 is probably going to be pretty damn crazy for cryptocurrency markets in particular, but really for all markets until it's not. More on that at the end. Make sure to stick around for that warning on markets as well. But between now and that warning phase, I think we have a lot of money to be made. So let's go ahead and get started in with this. And the first is this. Ben here says we're in the early stages today of one of the biggest economic booms in the history of the USA. This is the total credit to private non-financial sector just for breaks for the United States. So essentially, you can see this is bottomed out much in the way that it was bottomed out after the 2008 financial crisis, after the 1990s crisis, stuff like that. So looking at potentially a major upturn for the US economy, a massive economic boom, which is going to mean people have more jobs, more money to ape into dog coins. What we really, of course, are concerned about around here, obviously, but that's interesting. Now, there's a lot of other indicators that are in a similar position looking relatively bottomed out, like the manufacturing index, which has been down for quite a while and probably closer to being bottomed out than not, for example. Quite a few other things like that. So perhaps we are on the edge of a major economic boom, and depending on Trump's policies, that could push that forward or totally derail it. We shall see, of course. The global money supply. Of course, it's always about the damn global money supply. This is another big factor, which of course cannot be ignored. We've done whole videos on the global M2 supplies from Jamie Coots over Real Vision. He says global M2 bottomed at $94 trillion in Q4 2022 and has since climbed to $105 trillion. During this period, Bitcoin's market cap 5x, adding $1.5 trillion. In other words, 10% of the new money supply is leaked from the fiat system into the emerging global reserve asset of Bitcoin. Gold, equities, etc. have absorbed plenty of new money as well. He says, what happens if M2 expands by the usual $30 trillion this cycle? Now, this is based on extrapolating from current trends. Global M2 is projected to peak around January 2026, which, if that's true, and there's been a lot of different predictions for M2 to peak in Q3 2025, which would then, of course, speak well to a Q4 2025 final market top for the cryptocurrency markets. There's also a lot of fear that something could derail World War III or something like that in Q1 or maybe early Q2 next year. It's going to just wash away all the rest of this stuff. More on that in a minute. Anyway, with a monetary base north of $127 trillion, what will likely follow is another contraction in the money supply, which, if it follows previous cycles, would infer a global M2 of approximately $118 trillion at the back end of 2026. This forecast employs straightforward averages of previous cycles and linear extrapolations. No fancy footwork here. So, if global money supply is going to increase by that much, another $20 trillion approximately, that's a lot of cheddar, man. Just gonna put that out there. It's a lot of cheddar. A lot of cheddar. You make a lot of cheese with that. That cheddar is already cheese. Whatever. You guys know what I'm talking about. Now, whether or not it goes that long into Q1 2026, I think is the major debatable point, but global money supply is, broadly speaking, expanding. We're in a short-term contraction right now, but the general consensus for most analysts is that it's going to go up through 2025, which means it's good for cryptocurrency and risk assets. When it starts contracting, either in late 25 or early 26, that's when the next bear market comes. Money gets sucked out of the system for one reason or another, and that's when the next bear market comes. We are also entering an unprecedented easing phase. This is the third reason right here. So, there's a few things at play. One is that inflation is starting to go back up. 2 months in a row, it's gone up. We will see this week whether the Fed does indeed lower interest rates again. And if they do lower interest rates, is that actually the wrong decision? Are they actually setting up the Trump administration to inherit an inflation problem by continuing to push rates down? Is it too soon to cut rates again? We shall see. But we are regardless in a massive and unprecedented easing globally with major world banks all over the place easing rates. Of course, the Fed has been the biggest and most impactful one, but then you got banks over in like Europe, the old ECB there cutting rates again as well. We see this comment here from Bob. The global economy is getting the biggest coordinated easing since the global financial crisis at a time when macro conditions look nothing like the global financial crisis. Now, there's always risks. There's, of course, just the credit risks or the debt risks and all kinds of stuff. We've had some very smart names sounding the alarm bells for quite a while, and eventually they will be right. The underlying problems of the global economy will be brutal when they finally play out and you start seeing these things unwinding. But right now, the leverage is continuing to be dialed up just a little bit. Thank you to CoinTracking for sponsoring this video. Look, managing your cryptocurrency portfolio can feel like a full-time job, especially when you've been trading for years like I have. Heck, I even remember back when I first got into the cryptocurrency markets. I was so excited, but also pretty damn overwhelmed. Keeping track of all my trades, the wallets, all that stuff, taxes, what a nightmare. I had transactions scattered across different exchanges and so many wallets. And every tax season, oh gosh darn, I dread the heck out of that paperwork. That's where CoinTracking steps in with more than 1.7 million active users, including 25,000 accountants and corporate clients. This is a game changer, 100%. Whether I need an overview of my profits and losses, or whether I want to generate a tax report, CoinTracking has it covered. CoinTracking even supports over 300 exchanges and wallets, so I don't have to sit around spending hours manually inputting all the data, which of course sucks. Plus, it's the cheapest tool out there, and they even offer a free plan for up to 200 transactions. Pretty cool. And the tax reports? They're the most precise in the market, with support for 12 country-specific reports and 15 tax methods like FIFO and LIFO. And if you need more support, guess what? CoinTracking's full service handles everything from the managing of your accounts to the filing of your crypto taxes. Doesn't get much better than that. So if you want to make managing your crypto easier, then check out CoinTracking. Use my affiliate link in the description to get signed up for free. And if you go for a paid plan, you'll get a 10% discount exclusively using that link. And if you pay with Bitcoin, you'll get an extra 5% extra off. This is one tool you don't want to miss out on. Link in the description. Dan Ives. So this is about the fourth catalyst here. Okay, our first three catalysts, now we got the next catalyst. Fourth catalyst here, Dan Ives. We believe tech stocks will be up another 25% in 2025 on the shoulders of the AI revolution. Maybe 2025 is the year when the AI bubble finally pops, when the stocks that are trading so high over earnings finally pop. But then AI is just so mega bullish and it's not going anywhere, but we are getting a bit frothy. But it's also the most revolutionary technology ever in the world, much like the internet was back in the 90s. I feel like there was something to happen back in the 90s around like internet and like, .com companies. Probably nothing anyway. Regardless, AI still has room to run, especially if the M2 supply expands, okay? A lot more money to come into the markets in that situation. And that AI bubble continuing to expand out, of course, until it pops, obviously, will be good for crypto. One of the biggest narratives in crypto this cycle has been AI. Now we have AI meme coins. So things can get real crazy before they get much worse, of course. Next, of course, we have to talk about Bitcoin ETF inflows and really just everything going on with the Wall Street adoption of Bitcoin. Look at this, $36 billion so far. They bought another $600 million on Monday. Just cash, $600 million. $36 billion, the most successful ETF launch in all history has been, of course, the Bitcoin ETF launch, because this asset fucking rocks, that's why. Anyway, this is insane. What happens in 2025 with an expanding money supply, with easing economic conditions? Number probably goes up. There's been estimates, and I know estimates are just estimates, we could see up to $100 billion flow in next year as more and more institutions come on board. Now, is that going to play out? I have no idea. Even if we get another $30 billion next year, that's a gargantuan sum of money. If we just match 2024 and 2025, mind-boggling numbers. If we beat it, watch out, man. Straight up. Next, of course, is the growing enthusiasm for a strategic reserve. Reuters article's terrible. Can't see anything on this page. There's ads over here, there's ads over here, trying to run an ad down here. Chill out, Reuters. Gosh darn. Anyway, just bring up a tweet next time. Bitcoin rallies past $107,000. Hope grows for a strategic Bitcoin reserve. You have to understand at a very, very high level right now that Bitcoin is being talked about as a strategic reserve asset for the USA. Now we have Brazil talking about it, Russia talking about it, Japan talking about it, Argentina talking about it. It's getting crazy, okay? A few other countries have floated similar ideas in the past year or so. What gets implemented? Hard to say, but it's happening. People are talking about it. Things are getting crazy out here, okay? Big things are afoot, and that's, of course, just countries. We have a lot of corporate adoption going on. It's not just MicroStrategy. The MicroStrategy getting added to the NASDAQ 100 is massive because it means all these ETFs now have to buy MicroStrategy. It gives Michael Saylor more money to buy more Bitcoin, or sends the price of MicroStrategy higher, forcing the ETFs to buy more. Ultimate money glitch. It's crazy stuff. Crazy, crazy stuff. Now let's look at this, because the charts, I think, are also an important piece of the puzzle. You see, this is the chart here for Bitcoin. You see MACD weekly still huge uptrend going on. RSI weekly in the overbought territory, but it can remain there for literally for months and months on end, okay? But this is the Fibonacci here, drawn from the previous cycle peak to the cycle bottom. We have just come up to hit the first major milestone, which is at $100,000, the 1.618 Fibonacci line right here. The next line is at $150,000, and that's the 2.618 line. And the target for the cycle, is the 3.618 Fibonacci line, which just requires Bitcoin to rise by another $93,000, which doesn't sound that crazy until you realize that's another like $2 trillion. It's not that crazy. Not that crazy, guys. It really isn't. Anyway, these are the targets for the cycle. I think we're heading in that direction. This is a bullish catalyst for all of crypto, because if Bitcoin goes there, your altcoin bags, whoo, buddy, you're going to get rich. Good news. And now the bad news. At some point, you're going to have to sell. This is the Benner chart, and it's just a bit of fun. I mean, it's been strangely accurate in some senses, and other times it's been off by a few years. But essentially, this says years of good times, high prices, and time to sell stocks and values of all kind. That's 2026. Interesting. 2023 was a year of hard times, by the way. Good time to buy stocks, which it was. Fascinating, isn't it? Very interesting. Old pig farmer dude from the 1800s, huh? Anyway, whether or not this actually has any sort of value or not as an indicator remains to be seen, but it's fascinating nevertheless. More serious stuff here, okay? Seriously. The yield curve, of course, has uninverted, which normally happens right before a major recession happens, but you have the U.S. economy set to grow at 3% this quarter. Where's the recession? Where's the recession? It's not under here. It's not over here. Where is it? If you find it, let me know, okay? That being said, historically, basically every time this has happened, a recession's happened shortly afterwards, within about 6 months or so. This time different for most famously bad words in all of investing? Yeah, we'll see. We shall see. And there's obviously a lot of things that can derail the global economy. I made this warning, this could crash crypto video the other day. You should watch it. This covers a report from Nomura, okay? Not just random guy on the internet talking bullshit here, okay? Actual, like, serious suit guys who sit in offices behind, like, computers and, drive into the office every day and, see their kids for a few hours at the weekend and stuff like that. Those kind of guys, all right? TradFi hardcore bros, all right? Those guys wrote this report, all right? This talks about, of course, major risks to the global economy, from geopolitical tensions, World War III, all this kind of stuff. And any of that stuff can happen and can totally derail the markets. All of this positive stuff happening is great, and we're very, very excited about it, obviously. But you always have to keep the risk in the back of your mind that something could go wrong, because it often does in markets when you least expect it. You wake up one day and you're like, holy shit, where'd all my money go? Okay, you don't want to be that guy. You don't want that to happen to you. Okay, a lot of risks out there still in the global economy, which of course is why we have to take profits. Well, I think there's a lot of great catalysts coming for 2025. How long those catalysts are important, how long they last, how well the predictions actually play out, all remains to be seen. The only thing that we can control, we can't control the catalysts. We can't control how long the M2 money supply goes up. We can't control if there's a World War III breaking out or something like this. What we can control is when we click the buy button, when we click the sell button. And clicking the buy button, for the most part, there's still opportunities. There's still great new things happening in the cryptocurrency market, but a lot of the opportunity it's getting late. Not saying there's not still good buys, because there is. There's a lot of good buys, especially in the top 100 coins right now, okay? Not as good as they were a few months ago, but still pretty good, assuming that we're going to go much higher in the markup phase. But that window is closing, okay? And the time to shift from considering any buying at all into just selling is kind of just around the corner. So if you have been allocated for a while, considering switching your brain up to the sell function, right? If you're just getting into the market now, you're getting late. You're late. I wish you luck, and I hope that you get some good entries. Anyway, that's it for today. Thanks for watching.